What are the best ways to avoid paying taxes without going to jail? So legal ways to avoid paying taxes, and I know you guys heard about it, your 401k, become a 1099 employee, do this, do that. But in this video, I'm going to break down exactly other ways, lucrative ways to not pay that much money in taxes by sending money overseas or hiring your kid as an employee to also avoid paying taxes. Now, I guarantee you this, okay? All these ways are legal. I'm not going to give you information. You can go to jail. Not at all. All this stuff is legal, but it's not the standard, oh, get the 401k or do this, do that, get a CPA. I'm not telling you guys that. I'm telling you other ways to be lucrative enough and creative enough legally to actually avoid paying massive amount of taxes every single year. Now, if you guys don't know me, my name is TommyBryson. I'm an accountant and I upload videos on YouTube every single day. Subscribe to the channel, hit the bell to get notified. And on top of that, do me a huge favor, smash the like button, really appreciate it. And here's a question for you guys, okay? How much money do they take from your taxes every time you get paid? Comment down below, let me know, because I remember when I was working a normal job, I think it was like at the Gap, no, it was at my school, I was working work study back then, and I was getting paid. I got my first check, I was like, wow, here's my gross, but then net, I see, well, you have Social Security tax, you have Medicaid, you have local tax, state tax, your withholdings, and I was like, wait, can you stop right there, sir? All right, so how about I don't get any insurance, or I don't get any Medicaid. I don't care about any of that stuff, okay? And plus, I don't care about Social Security. Just take all that stuff away. I don't need it. Just give me all my money, okay? They're like, no, I'm sorry. It kind of works like that in the U.S. So I was like, all right. So how much do you currently pay on your taxes every time you get paid? Comment down below. Let me know. Now, let's get to the bottom of it and talk about exactly how to avoid paying a massive amount of taxes every single year. Now, the first thing I want to say is this, guys. I'm going to break down 3 solid ways to actually avoid paying taxes. And on top of that, at the end of the video, I'm going to give you guys 2 bonus ways to actually also avoid paying taxes. Like, for example, paying your kids' wages to actually make sure you avoid those taxes from your own income. Don't worry about it. I'll explain it on later in the video. Now, the first one is actually by, guess what? Okay, by the way, this is legal, I promise you, but number 1 is actually by having an offshore bank account. Tommy, stop right there. You're talking about Switzerland, Cayman Islands, Panama, Virgin Islands. That sounds super illegal. I've seen the movies. I've seen everything that happens. It does not end well. Wolf of Wall Street, I don't want to do this, And the answer is this, it is not illegal to have a foreign bank account, but what it is illegal is to try to have a foreign bank account to basically, do tax evasion. That's not what I'm telling you to do here. I'm telling you to do exactly how to avoid taxes in a legal way by having an overseas account. So here we go, guys. Here are the basics to how to do this. Now, the entire concept is that you want to hold your money somewhere that's actually a tax haven. So for example, you have the Cayman Islands. I'm pretty sure you heard about it. Jay-Z has an island around there, I think, or something like that. But the entire concept is that these people over there, they have no corporate tax, they have no income tax, no property tax, no capital gain tax, and on top of that, no payroll tax, withholding tax. They don't have any taxes whatsoever when it comes to standard stuff we actually have in America. Now, Tommy, I know tax is not the most greatest thing here, but countries, society, civilization, they make money from taxes. That way we can improve things. So how do countries like these actually make money and keep things running without having any taxes? The answer is this. Well, these people charge tax on goods. For example, if I had this Rubik's Cube here, or a pair of Yeezys, or a pair of sneakers, or whatever, and I bought it for $100, when it comes into the country, they charge me between around 22% to 27% as a tax on whatever goods are coming in. On top of that, if I have a luxury vehicle, I can get taxed up to 47%, I think, well, 42% to actually bring that vehicle in. So they make money through embargo, also through tourism, and all that fancy stuff. But the entire concept is this, guys. Well, Tommy, how do I use this to my benefit to avoid paying tax? And the answer is this, guys. What a lot of companies actually do, a lot of people actually do, is that they open up an account there and establish a business there, and that way they operate from there and they have to pay none of these taxes. Now, on top of that, what they also do is create a subsidiary company, which basically means that the parent companies in America but the company that's actually doing the transactions, the sales, and everything like that is actually established somewhere else in a tax haven. Like, for example, the Cayman Islands. That way, they don't have to pay as much taxes if they were actually operating from America. On top of that, they also have shell companies established there to actually do all this stuff. Now, the entire concept is this, guys. This is not illegal, but the only thing is that people do this to do illegal things. So the concept is, if you want to, you could do this yourself if you want to. However, if you try to go beyond whatever the law and legal ramifications actually are, you will go to jail. Okay? And it's not a but or a no. You will go to jail if you try to do tax evasion if they catch you. That's the entire concept. But there are legal ways to put money in a foreign account, have a foreign company that operates in America, and operates from the Cayman Islands, and the transactions in America, and gets taxed in the Cayman Islands, but there's really no tax there. So in reality, you kind of avoid tax. And that's the entire concept when it comes to having money in a foreign place, a tax haven. But I do highly recommend, before you try to do this, you talk to a CPA and a lawyer to make sure you were following all the ground rules. Because although you don't get taxed in that country you're operating from, you probably will get taxed in America for doing business there also. But probably like embargo and cargo and all that fancy stuff, and like the tariff stuff. So the entire concept is this. I highly recommend, guys, before you try to do this to avoid all taxes, or before you try to move to the Cayman Islands, highly recommend you sit down with a CPA and also a lawyer and talk about your options, because this stuff can get very tricky, especially when you're trying to do it by yourself and you get very, very creative. Okay, creative is cool, but you always want to make sure your creative ways of doing things are always legal ways of doing things. Now, the second way to save on taxes is by actually starting a corporation. Now, you're probably saying, Tommy, I've heard about this before. You make an LLC, you make a S Corp, you also start filing a 1099, you don't do W-2s anymore. I get that. You probably heard it, but you haven't heard like this before. I guarantee it. Now, the entire concept is this, guys. We all know that if you work a normal job in New York or wherever you are, your check, your payments, your whatever you want to call it, pay stubs will come with a few gifts that I don't think anyone actually wants to see on their pay stubs. And the answer is this. You get Social Security tax, Medicaid, state tax, local tax, and also federal tax. I counted 5. There's probably more out there. Now, the thing is this. If you have a W-2, you have some pros, and the pro is this. Your employer pays for your Medicaid, your Medicaid tax, and then also your Social Security tax. But the concept is that they only pay half of it, and then you pay the other half. Now, the con is that you don't get to deduct anything else. So, for example, if you have a phone or an office space, you don't get to deduct it. Now, if you do have a 1099, you can actually deduct your expenses, but, however, you cannot file for unemployment. So, for example, if you have a cell phone that you use for business, and you also have a home space here that you use for business, like I do, and you have, gas to drive to your workplace or whatever you want to do, you can deduct all this stuff, including even vacations. Now, for example, I go on vacation. By the way, this is legal. This is legal stuff, bro. Okay? I go on vacation once a year, and I get consulting from my uncle to do business. That's an expense. Well, it's not vacation. It's a business meeting. So, you see, that's the pro of doing business on a 1099. The entire concept is, if I lose my job, well, I don't get self-employment. Well, I don't get unemployment. But, however, there's a third option. You can actually become a company, incorporate yourself, S Corp, C Corp, LLC, whatever you want to do, and you can deduct a whole bunch of expenses, have employees, have deductions all over the place. But Tommy, which one should I do? Should I keep my W-2 job, my 1099 job, or become a business? Well, the answer is this. I like to mix things up. So, for example, there are pros to all these little concepts here. So, example, you could probably do a little bit of all of them. So, for example, you could become a W-2 employee for your company, and that way you'll save on taxes. Also, you can hire yourself at a 1099. I'm not sure about the legality of this, but you might want to check out with a lawyer. So, the concept is you can hire yourself on a 1099 to perform certain consulting tasks around your business, and you make some money, some revenue, but then you can also deduct all that income by having expenses. That way you have, your income from your business. You can deduct that. You have your W-2, which helps you with your entire, like Medicaid and also Social Security tax. And then you also have your 1099, which also helps you with deductions that you really wouldn't get from a W-2. That way you can spread the money around and also deduct all that stuff from taxes. Now, again, I highly, highly recommend you talk to a CPA or an accountant about this, and also a lawyer. This is important stuff. Now, the entire concept is this, guys. Although I'm an accountant, I studied accounting, I have a bachelor's degree in accounting. It's up here, you won't see it. But although I have all these qualifications, I myself also have a CPA that helps me with my business. Now, why would you do that? Why don't you just do your own taxes? The answer is this. If you were an accountant, the first thing they tell you in school is that, hey, you don't want to be your own accountant. Usually, you'll get audited a lot more because A, you're an accountant, 2, you're doing your own taxes, and 3, that's super suspicious. For example, you have a person that knows how to do taxes and he's doing his own taxes. Well, he might take his taxes and do a little creative work here and there, and next thing you know, he doesn't pay any taxes whatsoever. So that's why I have my own CPA, to avoid any legal problems. That way, that is out the picture. I don't get audited as much, and everything is handled from an outside source, and it also saves me a ton of time. So although I recommend you guys get a CPA, it's because I know personally that having a CPA helps you a ton. All you can do by yourself, I don't recommend you do it on your own. They usually have a lot more information than you do, so why not hire a professional to help you do the entire thing? Now, the third way is probably the most popular way that I hear on YouTube all the time. Tommy, go from wages to dividend income, capital gains. That way you can avoid so much tax. I think Warren Buffett spoke about it a long time ago also, but the entire concept is this, guys. It's not that far off. I'm going to make some math here to make sure you guys understand exactly how important it is to go from wages to dividends and also capital gains income. So the entire concept is this, guys. The average person in America makes around $61,000. Now, for this entire wage, the average federal income tax is around $6,634. On top of that, don't forget you have Medicaid and Social Security to think about. So in reality, that adds up to around $4,667, which adds up to federal plus Social Security and Medicaid, adds up to around $11,301. Now, Tommy, that's it, right? Well, no. If you live in New York, well, you also have state and local tax for a total combined cost of around $4,564. So in reality, your whole tax liability on 61K is around, well, let's do the math. 6,034 plus 4,667 from Medicaid and Social Security, and then also state and local tax of around $4,564, which adds up to around $15,865, which means that divided by 61,000, you're paying around 26,000. Well, wait, sorry about that. You're paying around 26% of all your money towards taxes. Now, you might say, Tommy, that's not a lot, but to me, that is a lot of money going to Uncle Sam, and I would want to avoid that. Now, if I made that same amount of money, that 61K, if I made that in ordinary dividends, which basically means like ordinary dividends is when you make money dividends, but you don't hold it for more than 61 days, which is like normal these days. But the entire concept is this, guys. When you make this money, well, you will only get taxed on the federal level and also state level, maybe around $6,634, which is like normal, and the state and local level, but you won't get taxed on Medicaid and neither Social Security tax, which is awesome. So that way you save money. But if you actually get taxed on qualified dividends, which is basically dividends you actually hold for more than 61 days after the execution of the dividends, it's kind of complicated. You can follow though, I'll explain later on in the video. But the entire concept is this, guys. Once this happens, well, now you're going to get taxed on something called capital gain tax, which means that on average, if you received around between $0 to $39,000 in qualified dividends, well, you get taxed around 0%. Not that bad, right? Now, if you receive between $39,000 to $434,000, well, in reality, you'll only be taxed around 15%. Still not as high as getting taxed at 26% with normal wages. On top of that, if you make between $434,000 and up, you'll get taxed around 20%. It caps out right there. So in reality, you having qualified dividends and qualified capital gains, well, you save a ton of money in taxes. One, you don't get tax Social Security or Medicaid, but capital gain tax is a lot more different, and that way you can avoid a ton of taxes. Now, that's not all, guys, because I don't want you guys to leave here and be like, okay, Tommy, I'm going to put all my money into dividends, I'm going to make all the money like this. Well, in reality, I want to be objective and give you guys some perspective here. The answer is, guys, that although, you save money, well, here's my thing, right? I invest in Acorns, and my average dividends rate is around like 2.35% every single year. On top of that, I grow my investment at around like a 7% rate every single year also. And I have a picture here to prove it. So here it is. I've grown so far this month around like 7%. And I've also received dividends of around like 2.35%. I did the math. So in reality, my total gain is around like 9.35% every single year. That's what I expect. But the main concept is this, guys. To make $40,000 in literally like dividend income, I would need around $1.6 million to make $40,000 in dividends at a 2.35% rate. I know about AT&T, I know about all those places, but I'm talking about just me in index funds. On top of that, to make around $434,000 in dividend income, well, that would mean that you would have to have around $18 million. So in reality, although dividend income is great and it's taxed very low, it does mean it will take a lot of work to actually get there, okay? Because it takes a long time to make that much money, to then give you money, to then get taxed at that rate. Although it's awesome, it will take time, so I recommend one thing here. I recommend patience. And I also recommend estate planning. So again, the entire concept here is make sure you hire a CPA and a lawyer to help you with all this stuff, because this stuff is very important and you don't want to screw it up on your own. Because I made that mistake in the past when I first started doing accounting, and the main concept is this: you always want somebody by your side that knows a lot more than you do and has more experience than you do also. Now, I have some bonuses for you guys here, and the bonus, if you made it all the way to the end of the video, like the video by the way, we appreciate it, but the bonus is this, guys: you can actually contribute to your 401k and all that fancy stuff. You guys know that, that's what I put all the way to the end of the video. But also I have a second bonus, which basically you can actually pay your child a wage of around $12K a year, and then you use something called a standard deduction to actually deduct that entire amount and pay no taxes on it. So in reality, you can take that money from your business, put it in your kid, get it deducted, no tax. If you had 2, 3 kids or 4 kids, well, now you're talking about a lot of money being put aside that doesn't have to pay any tax on it. So it might not be like $1 million that you put aside and you don't get tax on it, but still, $12K on each kid is not that bad not to pay taxes on it. So in reality, guys, those are legal ways to actually pay little to no taxes when it comes to legally avoiding taxes. So comment down below and let me know which one is your favorite. And if you ask me, I'm like a very classic guy, so I want to grab all these ways and mix it up in a pot and figure out how to do all of them to save me the most money when it comes to taxes. Comment down below and let me know which one is your favorite. By the way, I always like the idea of putting money in the Cayman Islands. It's pretty cool. And by the way, it is legal. It is not illegal. Don't get carried away by the hype. You just have to make sure you actually find out the best way to do it by hiring a CPA and also a lawyer. Guys, as always, if you enjoyed the video, like the video, really appreciate it. Subscribe to the channel, hit the bell so you get notified. And on top of that, if you want to talk to me one-on-one, uno, just DM me on Instagram at TommyBryson. And on top of that, if you want to watch the 7 illegal ways to make money, click this video right here. I don't recommend you do, by the way. On top of that, if you want to subscribe to the channel right now, click this face right here and subscribe to the channel right now. I'll see you guys tomorrow. Thanks for watching, and peace. Don't click this video right here. Peace.